following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 23rd, terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything humanly possible to have an extraordinary day. Let's always remember, what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But folks, what is scheduled becomes real, and I want to thank you for scheduling your time with us here this morning. It is my honor to serve you. I am grateful for your presence here today. So go ahead, pick up that phone, dial on in at 877-927-6648 internationally. You can dial in at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. I guarantee it. And let's face it, here's the deal. If you're confused about something, the benefit of being confused is it means you're just about to learn something. So if I can teach you, then go ahead, call on in, because I would be honored to do that. This is Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got the Dow up above the 18,000 level. She's in a new hemisphere out here, trading on 18,043. I think we took a look at some intermediate term targets in the 18,150 level out there. Boy, I'd love to see that get hit today. I would love to see it move up there. We'd probably see the New York Stock Exchange really do a number, really get some nice net advancing issues out there. And that would bode well for the bulls. That would suck wind. I think somebody had used the sucking wind thing, and that's where that came from in the Tigers Den out there for the Bears out there. The Dow is, again, trading out at 18,048. The S&P is up 7. She's trading at 2,085. Composite up just slightly up $2. Of course, the composite was the first one to get back into a uptrending mode out here. So the composite has done a lot of the hefty lifting out there. Russell 2000, she's up 5 points. That's trying to trade up to its consolidation highs. That's another place where we'll get a message. DAX is up 42. FTSE's up 18. You've got Goldilocks back $2. Silver up in nickel. Light sweet crude up 59 cents out there. Dillard's, the retail maker out there, the retail store maker. What the heck is a retail maker? Retail store Dillard's. That's up leading the charge dollar-wise, $5.82 this morning, up about 5%. Wynn Resorts, we were taking a look at that as we were going into that closing segment, giving a substantial, significant bottoming pattern a few days ago. With that island reversal, I forget to run my scans to identify those island patterns out there. I gotta make that a 2015 resolution to every single day run my island reversal scans out there, because both at the upside as well as at the downside out there. Nonetheless, you got Google. That's up $4. Doesn't mean that's a winning trade, but boy, you like to see those candlestick patterns out there. Remember, nothing more bullish than a failed bearish pattern. That could be the case with Federal Express if it ever takes out its highs. It had an island reversal. That island only lasted for 1 day out there. You've got Tableau Software. That's up $2.30. Sierra Wireless, SWIR, she's up $2.30 as well. To the downside, Regeneron Pharmaceuticals off $19. Was Regeneron to the downside yesterday? No, I think it was Celgene. Maybe Regeneron as well. Biogen, that's to the downside off $11. You got the IBB, that's down $10. That was that nickname of sucking wind. That's where that was coming from. Agios Pharmaceuticals down $8. You've got Cure. You got all the IBB or the biotech related ETFs. They're all trading the downside. Take a look at the entire. I don't know if I'm going to be able to share anything to the downside with you. They're all biotechs: Regeneron, Biogen, the IBB. You've got the BIB. You've got Agios Pharmaceuticals, Alexion Pharmaceuticals. You've got the Triple Direction Daily Healthcare, Celgene, Pharmacyclics, Amgen, Bluebird Bio. Oh, my goodness. I don't know if I can... we're going to have to really stretch to find something on the downside that is not biotech. I guess we're going to have to look at something biotech-related. Isn't that the case? In any event, let's go take a look at the indices out here. Let's go see what we can see. Let's start off by taking a look at that Dow trading out at 18,040. It's important that the Dow continues to trade above that high from December the 5th out here. That's at 17,991, so you'd like to see it close above that. Don't worry. If it closes at 17,999, somebody's going to say it failed at the $18,000 level. And I'm going to say, are you kidding me? All you got to do is just close above the swing point. The swing point high is 17,991. Let's not get caught up into semantics out here. So as long as that takes place, you've got no possible failure out there. Just a move higher. That move higher, of course, when we looked at the Dow, what we were looking at is horizontal trading range boundary lines that give us a price target here of about 18,124, 18,165 as the potential next stop out there. So it's another 130 points or so, maybe just about another 90 to 130 points higher, where I'd expect to see some resistance level inside of the Dow. So just keep that in mind. But I would expect the way things are trading that we see that take place by next Friday, if not sooner out there. As long as I'm over here, let me go take a look at the summation index. Nothing unusual there. Let's go back to the main view out here. So that's what's going on inside of the Dow. If we take a look at the S&P 500, she's up just slightly, up about 5 points, straight out of 2,083. But that just slightly gets it above its high from December the 5th. That high is at 2,079.47. So yesterday, the actual high inside of the S&P was 2,078.76. So it stopped just below that swing point high. This morning, it's taken it out. As long as it closes above 2,079.47, you've got no failure. If it closes back below, no, not necessarily a failure out there, but a resting spot for sure is what it would look like. If we take a look at the Nasdaq Composite, that's struggling, but of course you got all of these biotechs that are just simply getting hammered. So we'll go take a look at that because their weighting structure within inside of the Nasdaq. But the Nasdaq, nonetheless, no bullish reversal candle signal, anything along those lines. She's trying to get to the November 28th high. That's at 48.10.86. You're at 47.76 as we speak right now. Let's go take a look at the Russell 2000. That's up 4 points. The Russell 2000 trying to get up to that high hurdle of 12.1282. At 12.1282, if we go ahead and we pull this stock chart back, what you're going to see is that 11-month, 11-month, what am I talking 11-month? 13-month consolidation pattern out here that began back in October of 2013 out here. No coincidence that we had a low in October of 2013, and we had a low in October of 2014, and that was the consolidation loan. Hit me upside the head with a baseball bat. How does that work out there? Oh, that's right. In October, the market makes significant lows versus that crash of 87 thing that everybody talks about. Yeah, they just talk about that to throw you off guard out there, but not here at TFNN. No off guard here. So the guard that we're taking a look at is that's protecting price right now is going to be that March 4th high, and that's at 12.82 level. If, in fact, we see the Russell 2000 get above that area, what that sets up is about a 160-point move to the upside. Add 160 to 12.12, that gets you to about 13.80. 13.50 was the long-term monthly consolidation break, the measured move out there. Remember, when prices break consolidations, they make a move equal to or greater than the actual measured move out here. So 12.82 right around there is the level to be watching. The actual swing point from the July 1st, 2014 high, that was 12.1355. So that gives you kind of the range out there to be focused on and looking at. Russell 2000 should at least be able to get up there and test that level. If we take a look at, what are we going to take? Let's go take a look at some of these stocks here, these biotechs. Let's look at the IBB itself, down about 4% here this morning, off $12. Let's go see what we've got out here inside of the IBB. Pull back this morning, 780,000 shares. Now, the swing point from December 16th had 2 million shares, so it's pulling back into a swing point with volume. We've only been trading here for 45 minutes. It has not broken that low, but it does say that that low ought to get tested, and that low being 292.97. Now, you get below that, where's price likely going to head? I'd have to say it heads down to the November 14th level, right around the 286 mark out there. And that is what the IBB iShares NASDAQ Biotech ETF looks like as we speak this morning. Let's take a look at Regeneron Pharmaceuticals, lead dog in the hunt on the downside, off $20, down 5%. That is trading into the same swing point out here, and that is the December 16th level, 929. Here's the number of shares, 929,000. You've done 301 already, so that's coming in there with volume. Now, if it breaks that level, in the case of Regeneron Pharmaceuticals, pretty good chance that she'll go ahead and make her way down to about the 362 to 365 type range out there, and that's where that would be headed. Let's look at Biogen, BIIB. Let's go see what she's got in store for us. That is pulling back into a most recent breakout area. That breakout area had 2.4 million shares to the upside. Problem is, you've got 461,000 shares to the downside. Now, will this volume keep up there as we've seen in the first 45 minutes trading? I don't know. But in the case of Biogen, what you'd be looking for is you'd like to either buy Biogen, if you're looking to buy Biogen, right around the 323.41 would be your first signal out here. But you need to see price moving back with less than, I'd use this swing point right here, 1.6 million shares. If it goes after that mark today, it's going to have more than 1.6 million shares. That's for sure. But that still could be a level of support, 323.41. If that level fails, then you're looking at between 310.47 and 314.95 as the likely spots for Biogen. Any close below 310.47, and you're looking for a test of that high volume low out here from October 22nd. That would then get you down to 290.85. That would then be your potential buy inside of BIIB out there. Let's just stay with one more here. Let's go to, Celgene got nailed yesterday. Wasn't that the case, Celgene? It shows today. Yeah, it did get nailed yesterday. That was down. Volume ended up not being too shabby. But let's come back and take a look at it. I think it was Celgene yesterday. Nonetheless, this has broken a B point, and it's doing it with volume. Small A to B equals CD to the downside. That is the December 16th low with 7 million shares. You've done 4 million. That says that what we ought to see is at least a move down in Celgene to about the 102.13. So from an IBB standpoint, if you trade this to the upside or to the downside, it was Guild. Maybe it was Gilead Science. That's what it was, to the downside. Thanks, Terry, for that. In any event, if you trade either to the upside or the downside, you've got these. You've got to go and find out what the actual weightings are, the top 10 weightings inside of the IBB. That would help you a whole lot. So Celgene, CELG. Let me see. I'm sorry, not Celgene. We wanted Gilead. We just did that. Moment here. GILD. Let's go see what that is doing here. So, yeah, that was down big yesterday, big volume to the downside. And you now are confirming, you confirmed an A to B equals C to the downside big time. Let's go see what that looks like out here. Of course, it would be helpful if I had that tool turned on. Otherwise, it makes it really hard. But we'll turn that tool on. There we go. So let's go initiate the tool, our A point out here on October 31st. That's your A point. Your B point is the November 25th trading session. Your C point back out here on December 19th. You've got Gilead Sciences. The 1 to 1.272 takes you to 80.601. You're at 89.05. I would have to say you're probably more likely headed to about the 79.62. But let's go look at expansions of swing points. Is this going to set up a butterfly? Are there some butterflies in your stomach out here? There's be a butterfly buy that would set up right around the price point of about 84.90 to 86.01. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at some of these stocks here that are moving to the upside, since it's only, for the most part, pharma stocks moving to the downside, dollar-wise, I should say, that are lighting up my screens. Let's go take a look at CF Industries out here. CF Industries is up about 2% this morning, trading out at 276.72. This thing is certainly off of that bottom here from December the 16th. Today, so far, we've got volume of 147,000 shares. That is moving into a swing point from November 21st with 975,000. So it's got the volume this morning that says it ought to go at least test the top of that, which is 280. But if it's going to do that, it might as well go test. It's trading into the swing point here from October 7th, and that low is 272, and that's 1.5 million shares. Might as well go test the top of that area, 283.03, and that is on CF Industries. See anything else out here? No, nothing else. So that looks like that's where she is headed to. Dillard's, I think we covered that earlier. Yeah, we did. Dillard's is headed up into the 125-ish type range out there. It could be a double, triple, quadruple top out there. That's where Dillard's is trading to. Wynn Resorts, we took a look at that just as we were going into the end of the first hour out there. Nice little island top reversal. We didn't identify where this is likely to head to. And when you take a look at the completion of any A to B equals CD pattern, you'd look at least 3 different retracement levels, the 0.382, 0.618, 0.786. So you're looking at 166.78 becomes the first target area for Wynn Resorts out there. Second is 187.31. That's probably more likely the spot. But you got a nice little island bottom reversal candle formation inside of Wynn Resorts. We've also got Valmont Industries. VMI is the ticker symbol. She's trading up about 3.5%, up $4.54, and looks like I deleted that chart accidentally. That's a bummer, because then I think I lost all that data that I had out there. Oh, I don't want that. Time and sales. There we go. Oh, well, just means you got to, hey, that's a good thing, because you've got to redo your work anyways, right? You should always come back to a chart and just simply always start with a clean palette, and that way you can always look at the bull and bear case for everything that you trade. You don't get locked into your views out here. You just go look at the chart patterns. Nonetheless, give me a moment here while I get back and at least style template. What do I want out here? I'll just go to that style template. Okay, there we go. So let's go back and take a look at Valmont Industries. VMI is a ticker symbol. That was up 3.5%, up 454. This is a daily chart. Boy, this thing is up off the bottom nicely. Candlestick-wise, where is this thing headed to? Pull this back out here. Where is this thing going? Well, I'd have to say it's headed back to its most recent swing point area, which is right around the 139-ish range, or 127 as we speak right now. That's on VMI, Valmont Industries. Let's take a look at the Sierra Wireless. SWIR is the ticker symbol. Looks like this thing is at maybe all-time highs, certainly 52-week highs, but maybe this is all-time highs. So, yeah, all-time highs off to the races. This thing recently took out a swing from December 8th. 1.2 million shares out here. That was taken out with million shares yesterday. So not taken out with volume. Nonetheless, you've got an A to B equals swing. Here's the swing that was taken out with volume. Pull this back here. Oh, come on. Come on. Oh, Lord, I can't get a cursor out here. Okay, that's a bummer. What did I do? There we go. That's the swing here from November 18th. That at 822,000. That is your A to B equals CD. So... I'm just, the system here is struggling a bit this morning. It's not going to allow me. There we go. There's my A point. Here's my B point. Come on. There we go. And our C point right down there. So you got a 1-to-1 A to B equals CD. Sierra Wireless ought to get up to 53.37, maybe 58.13 out there. Let's take a look at what else we got to the upside. United Rentals, URI, and Ralph Lauren. Let's go take a look at those two stock charts before we go to the breakout here. So you got United Rentals likely going to run into resistance here right around the 105.03 to the 106.25 level. Now, volume was only 3.3 million shares. Yeah, it's still coming in that level with light volume. United Rentals ought to find some resistance at that area. Let's go take a look at Polo, Ralph Lauren. RL is the ticker symbol. Looks like that dropped off of my screen, but we'll go ahead and we'll put it on ourselves. RL. Let's go see what it is. I mean, a moment out here, Ralph Lauren. So this is pushing into its most recent swing point high. That is from, well, that was the trading session after Thanksgiving. That was November 28th. 500,000 shares. We'll give it 1 million shares. You've got 130,000 the first hour of trading. So light volume today as it tackles that swing point. Nonetheless, it ought to get up and test 185.14. This is Steve Rhodes. This is TFNN. Dow's trading at 18,040, up 80 points. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow trading out at 18,037. S&P at 2,082. That's up about 3 points. Composite certainly struggling here this morning. You got the biotech sector taking a big hit as we speak. Now, Basil will not be doing his show today, so why don't I do this? Why don't I pull out, just so I give you guys a feel for where the indexes are, what they're doing, and we'll put on I've got the Rhodes Momentum trading signals on out here. I've got the Chapman wave counts. We've got the whole kit and caboodle. So if we take a look at the NASDAQ composite off of the daily chart out here, very likely here, this is the index right now that is struggling the most. No bearish reversal signal or anything along those lines as we speak right now. We know that. Let me get my cursor out here. It's up towards its highs. We're looking for it to deal with its November 28th high. They got the Dow over its December 5th, the S&P over its December 5th. The composite needs to get above its November 28th level. If we, let me do this for you here. If we take a look, we've got a little kissy going on the MACD out here. So that's what's taking place. Actually, it looks like you have a little bit of a bullish crossover. You're in that second leg on the way up inside of the composite. So everything actually all looks good for the composite to continue to rise into the end of the year out there. And this is the industry that is struggling the most as we speak right now. If we go take a look at the Dow Jones Industrials, that's over the 18,000 mark out here. That is only in the, give me a moment here to do this. Let me update this. That is, come on, update. There you go. There's our magic. Do it quickly. Okay. Okay, so we do know is this has absolutely started a new leg to the upside. Let me do this instead of using the using that. Okay, I did that. So now this is really actually only in its first leg to the upside. So the Dow is saying this is going to be long and strong out here. Now, how much more oomph with regard to that volume? We took a look at utilizing my horizontal trading range tool out there. That's on eSignal. You guys, if you are an eSignal user, you can get access to that for the next 30 days, absolutely free. Just go on over to Traders Formula Consulting. It's a whole slew of tools that you can utilize out there for free for the next 30 days out there. And that gave us a target, I think, right around the 18,150, 18,200-ish range, somewhere right around there. But the Dow right now in full-blown bullish formation out here, only in that first leg to the upside. And that is the only call you can make, as it made that seventh wave to the upside right back here at that December 5th high. So that is muy strong. I don't know the Spanish name for strong out there. Maybe somebody can help me out. And the Tigers did. If we take a look at the trannies out here, the Dow Jones transports. Hey, as the transports were making their low, most recently here back on that trading session of December the 17th, made a nice little hammer candle, little gap up after that. This is a nice full-blown bullish mode out here. So this is on its way higher as well. That's offering higher prices certainly coming into the end of the year. See, all this is giving us signals as to what's going to take place, in my opinion, between now and really the first week of January out here. Subject to any type of cataclysmic failure out here, that's really what its message is. If we take a look at the NDX, this looks really just like the composite for the most part, even though it's been struggling here this morning. It just simply is no bearish reversal or anything along those lines. It's still got a nice, well, the MACD hasn't crossed positive yet, but it will. It will before the next couple of days are out, I would suspect. We take a look at the New York Stock Exchange, NYSE right now. It has not been able to take out its highs, but it's still in its first leg to the upside out here as well. Duro in Italiano. Thank you there for strong. So muy duro. If we take a look at the New York Stock Exchange, this thing here is actually just crossing, the MACD is just crossing positive out there, getting into a bullish formation. So those highs ought to get tested inside the NYSE. Those are the highs here from the trading session of November the 25th out there. The New York Stock Exchange, let me just switch over to one other chart, and I'll come back to these here just to give you just an overall view. But let me see, where are we at on net advancing issues today? Right now, as we speak, we have 1,000 and molto duro. Perfect. Okay, we've got advancing issues, net advancing issues as we speak right now of 1,040. If this thing can double that up, get to 2,080, you actually need to get to 2,260. This thing will give us a jet propulsion in the marketplace. I'm not saying that the market can't go down, but you would want to be buying every dip for quite some time to come out there. Now, I don't know if we're going to get that kind of net advancing issues, but it is something to pay attention to. Back at the ranch, let's go look at the Russell 2000. Let's go see what its daily chart is doing out here. So the Russell 2000, Close that. The Russell 2000, this is one that we really want to pay attention to, because the Russell 2000 could be the one that gives us more of a signal that the market has finished its move higher for a short period of time, a week, maybe two, out there. And so I think it's going to be Russell 2000. Now, I say that because we know we're coming into that 13-month ceiling out there. We're not there yet, but we're coming into it. And I would say we probably get there by next Friday. By next Friday. That means it could happen before then, right? So the Russell 2000, we're looking to see what happens as price gets up there. Now, at this stage of the game, you're potentially in just your sixth of 7 potential wave counts to the upside out here. It could be the first, but it could also be the sixth. And so it's going to be important to see how the Russell 2000 trades over the course of the next several days as price gets up into that consolidation. Now, if the Russell is able to get above that consolidation zone, that'll be an extremely bullish signal out here. The Russell has been moving higher with less relative strength out there, with less molto duro out there. I probably totally butchered that, but I will get the Evelyn, not the Evelyn, that's a speed reading. I need to get, what is that, the Rosetta Stone. That's what Steve O'Sun needs here. I need that Rosetta Stone deal out there. Like I have more time in my day to go learn another language. This is the language right here. This is the language of pattern recognition that I spend my time with. So that's inside the Russell 2000. If we small jaws of death pattern. Now we got somebody in the den. We're gonna have to get that someone in the den there. A cave. You've got to have a cave to be in there. All looking for the short side of the trade out here. Guys, gotta get a different set of glasses. I'm actually having fun out here. The beauty of the markets that we trade is if we didn't have two people with two opposing viewpoints out here, we wouldn't have a market. We wouldn't have pattern recognition. It would just simply be a one directional deal out here. So, these markets work because two people can look at the same information and draw two different conclusions out there. And that's really a beautiful thing. Now, if we take a look at the semiconductor index right now, it's basically flat for the day. It's a kind of little doji-ish style candle out here. But nonetheless, it's really still only in its first leg to the upside. Let me see. Have we gotten a positive cross? Have not gotten a positive cross on the MACD. So, the markets, in order to truly get into jet propulsion territory, the semis are going to have to participate out there. And at the moment, they have not. Does that mean you move to the bear side? No, and you certainly don't do it during this next week that we're in as we speak right now. Just too much upside bias out here. If we look at the S&P 500, she's kind of flat as we speak right now, trading out at 2,081, but very likely just simply in its first leg to the upside, positive crossover inside of its MACD out there. Let's go take a look at the XAU. How about this, folks? We're just going through this. Now, all these charts here, my clients and subscribers to Mastering Probability, they get access to each of these charts each day. That way they know whatever tools or patterns it is that they are following along with. It's right there at the snap of their fingers. Inside of the XAU, what is it that we can say about the XAU and the gold miners? Until gold and silver actually form a bottom, and I don't know that they've done that. I don't think that they've done that as we speak. The XAU, the best thing that it can do is try to hold itself up. And then if it holds itself up and you see some type of bottom, then what you want to do is you want to go take a look at some of the stocks individually, I think, that are trading the best inside the mining ETF out there. If we take a look at light sweet crude out here, this is the continuous contract. We don't see any reversal signals really worth noting out here that are in place, and so I say light sweet crude likely moves a bit lower out there. If I take a look at what I want to take a look at, so that kind of covers that for the most part, does it not? What else? Let's take a look at the VIX index. The VIX index trading below its 50-day exponential moving average. Right now, today, that's priced out at a level of 1565. You're at 1506. As long as price stays below 1565, tells you a lot about the liquidity in the marketplace, which is good for the bulls. If we look at the euro, Japanese yen, that's another liquidity gauge. That is moving just slightly to the upside. Nothing negative that we see out here. So that is also good for the bulls. The euro on the other side, you've got the euro. That is trading down, has not formed a bottom, at least not as of yet. If we take a look at its daily chart, that is what is boding well for the king. If we take a look at the current contract for the U.S. dollar index out here, we'll see that this is trading out at $90.28, give or take, because of my 10-minute delay on this. If we take a look at, let's move this over and take a look at not the current contract, but the continuous contract. Let's sign F out here. And let's go see what it is doing, because I think this thing is trading up into, let me put this on a weekly time frame out here, weekly or monthly, probably monthly. Let's put this on a monthly time frame. There we go. So we put it on a monthly time frame. Let's go check out the swing points that this is trading into. So here was one triple top, and it has decided no chance out here. So here's the triple top, basically. So you're trading above that, and that says that what the oops, didn't mean to do that. Come on, baby, delete that. Okay, let me come back here and turn something off. Let me turn off those signal boxes. Okay, so now if we take a look at where the U.S. dollar index is likely to head to out here, good Lord. That is just, I'm having some struggles here with my cursor. Well, it's coming back to this 2005 swing point out here. I would give you the price, but apparently the system doesn't want me to be able to give you that price. Let's just say it looks like the U.S. dollar index wants to move to higher highs, but it wants to at least tag this little swing point area. It's above 89.44, and I don't recall the number off the top of my head. Let me see if I can. Can't do anything. It's frozen. It's frozen, like that Disney movie out there. Okay, let's take a look at, so much for the currency pairs. Let's go take a look at what's going on inside of the ETFs. Let's look at the XLV. The XLV is trading off $1.88 this morning. Of course, that's because we've got all these biotech names that are trading to the downside. Let's switch it off of the monthly time frame. Let's take a look at the daily, see what we've got out here. So just like as we looked at the IBB, Celgene, Biogen, the whole kit and caboodle, you're down with 8.7 million shares as we speak right now. It's trading into a swing point that's got 14 million shares. So you're coming in with volume that says that low ought to be tested at $67.32. That is on the healthcare sector out here. If we look at, as long as we're in the sectors, let's go look at the energy sector out here. Let's go look at the XLE. The XLE trading out at $80.42. This thing is off of the bottom out here. The XLE, where does this want to make a run to? Well, at least wants to try to get, golly. Son of a gun. I don't know what, I'm going to shut this down for a moment. Well, I've got 2 minutes before the break. I will shut it down during the break. There's a swing out here. Looks like it's December 5th, 4th, probably December 3rd, right around the $82.61 mark. That's where this thing ought to find a bit of resistance. If it can get above that, that would be fairly bullish out here. Oh, this is gonna be terrible. Let me try, if I go to this page, what happens with my charts. Okay, so let me try this. Hey, here is the NDX 100. Let me try this. Let's go take a look at Apple. Okay, looks like it might be working here. So on the NDX 100, we'll look at the top 10 holdings in there, which equal more than 50% of the weighting structure. That's how I'll bide my time. Apple is really not doing much. Trading sideways. We got your TAS market profile high at 113.99. If it closes that, then what we ought to see is a move up into probably the swing point high, which looks like the November 25th high at 119.75. I'm sorry. Yeah, 119.75 looks like that is the swing point high for Apple. Not doing much to the upside, to the downside, just an inside trading day as we speak right now. Let's look at Microsoft, MSFT up 55 cents as we speak this morning. I could have swore that I heard somebody on CNBC this morning. It was in the background, and they were talking about buying the dogs of the Dow, or just dog stocks, and they mentioned Microsoft in that name. And I was just kind of like, how did they actually get on CNBC? Because they were acting as if Microsoft hasn't done anything all year. Hence, I would say, well, really, if you go look at January 14th, you had Microsoft down at $34. You're at $48 right now. In any event, be careful what you hear out there. Just do all the work yourself. Now, in the case of Microsoft, she's trading back into her swing point, most recent swing point, from December the 4th. That had volume of 30 million shares. You're in there with 7.5 million shares so far today. Now, that's pretty good volume in a lightened trading session, and we've only been trading for an hour and 20 minutes out there. So that looks pretty good for Microsoft. That ought to go test that high at the 49.06 range at a minimum. Let's go see. You got Google, Facebook. Let's look at Facebook. Is off about 69 cents. This made a all-time high again today, but it has traded off of that high since then. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 73, S&P is up 3 points. Composite is off 14. The Russell 2000 is basically flat as we speak. The DAX has given back some of its gains. It is up 20 points, just as well as the FTSE out there. CF Industries is leading the way to the upside, up $7. Dillard's is up 6. Google's up $5. Wynn Resorts, that's got that nice bottoming pattern out there. with that island reversal. To the downside, it's really all about the biotechs out here. You've got Regeneron Pharmaceuticals. She's off $23, and Biogen is off 17. We've got a caller on the line. I think is our man John from the city of brotherly love. John, how you doing this morning?
Happy holidays, Steve Rhodes, to you, your family, and the TFNN crew.
Thank you, and same to you. Thanks so much. Looking forward to maybe a day off, which is all we got in these markets, so that's okay. You want to look at Agnico? We don't have a lot of time. I know you want to look at Agnico Eagle.
We're going to give you 2 days off, Steve. Yes, and to wrap up this show, Steve, I'd like your eyes on this one, please. AEM Agnico Eagle, a high-quality mining enterprise based out of Canada. I know from history, your personal history that you've described over the years at TFNN, you were a student, a master trader student of both Steve and Larry Pezzavento.
You mean Tom? Tom and Larry.
I'm
yes.
sorry, Tom O'Brien and Larry Pezzavento.
But I've been a student of myself as well.
What did I say? Gosh, I apologize.
It's cool. Yeah, absolutely.
Anyway. Since you have that training background, please pull up the daily chart on AEM and note that it was back on November 6th, I believe, that AEM made a low at about 22 and change.
Correct.
It made another lower low. It made that last week, December 17th, down at about 21.65. Question. Is that pattern a butterfly to a bottom pattern? A Larry Pezzavento butterfly to a bottom pattern?
Not if you were to use that swing point from November 5th, that first low, because you've got to have, for a butterfly, right, you've got to have an expansion. So that expansion would actually take us to about $20.56. So at 20.56, if I go ahead and I'll move this up, whoops, I'm going to move this higher on the screen out here. And so I can try to expand it. There we go. So you've got your A to B equals CD. Let's go see what that looks like. So this is the daily chart. Our 8 points up here on November 21st. I would have to use my...
You're doing the charts from that peak, November 21st.
Yep.
It is an AB to CD down, 2 new lows. It did make a 1272 expansion. That is true. But it is an exact, precise, I mean to the penny, AB equals CD down.
Yeah. And then he had a bullish reversal signal. No question. He had a bull sash.
I like the looks of this pattern trading-wise. The conservative trade is buying it and giving it room all the way under the lows of last week, which is $2.
Oh, absolutely.
If you wanted to be more aggressive, you might look for something tighter. But what do you think of that idea, please?
I don't think you need to give it that much room. I think the room you would be giving it is on the close. So I'm going to put the weekly chart on my screen here, John. And so you've got the daily. You've got an A to B equals CD to the downside. Your stop, you've got 2 hammer candles on a weekly basis. So that says that AEM, the communication, what it's communicating to us is trying to put, and those hammer candles were the week that began November 3rd and the week that began November 10th. And so it says that low at 2208 is a key level out there. That was tested last week, and that held. So any close below 2208, then it says lower price. Otherwise, your back is up against the wall. All right, my friend?
Thanks very much, Steve.
Hey, you bet. Have a Merry Christmas. Folks, stay tuned. A replay of some show is going to be up because Basil's not going to be with us. Have a great Tuesday. I look forward to seeing you tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.